Bettering your business takes working with the best. With the James Hardie Alliance, you gain access to leads, training, networking, and support from the #1 brand of siding in North America. Achieve new levels of success by joining the James Hardie Alliance today.
This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to be joined by Chris Felderman. Chris is the Senior Managing Director and Co-Head of Consulting at Palm Tree LLC. Palm Tree is a remarkable mix of a consulting firm and investment bank and really, really bright people. We're going to talk to Chris today about sort of the deal market, the business market in light of tariffs, some economic concern that seems to be up and down. Some days are really positive, some days a little more concerning, but just a world in which there's a lot of uncertainty. Chris, before we get started, can you take a moment to introduce yourself and tell us a little bit about yourself and Palm Tree?
Sure. Thanks, Scott. It's great to be here. As you said earlier, my name is Chris Felderman. I'm a Senior Managing Director here at Palm Tree. I lead our Chicago office and I oversee the operations of the firm's consulting practice. Palm Tree, we like to consider ourselves the modern M&A and operations advisory firm. And our primary objective especially of our consulting offering, is to provide perspectives on financial and operational data to enable buyers and sellers to make more informed decisions to drive value creation. We typically provide support, provide support across the entire investment life cycle. Pre-transaction, our offerings include financial and operational due diligence, so think quality of earnings. We also provide pre-close accounting and finance operations diagnostics around the people, process, and systems, as well as data and analytics assessments. In post-close, our transitional offerings are generally focused around the things that companies taking on institutional capital for the first time typically have not focused on, which includes accounting and finance support, enhancing that and optimizing the financial reporting process, cash management, net working capital management, improved process documentation, and even interim support such as CFO, VP of Finance, or Director of FP&A and the like. And on the performance improvement and value creation side, we offer solutions like audit preparedness, financial forecasting and budgeting enhancements, data and analytics improvements and implementations, as well as operational assessments and improvements that provide true value creation and enhance enterprise value. And we do this through a solution. We offer these solutions through a bench of nearly 100 professionals across our 4 main offices in LA, Chicago, Detroit, and Dallas, many of which have prior Big Four, corporate finance, or investment banking experience.
Thank you. And take a moment, in this time where M&A is a little bit softer and just starting to maybe get moving again, there's been so much discussion of tariffs, uncertainty, and so forth. How important is operations consulting and businesses just having their house in order and in great shape to make sure they're thriving either way? How important is that part of the business to your customers?
Yeah, I think it's especially important for private equity-backed portfolio companies that, whether they're purchasing raw materials on an import basis or whether they are, manufacturing overseas and need to bring that product back stateside. I think now is a time to really assess what the costs of those imports are doing. And I think, our sense is that these announcements and generally speaking, the uncertainty around them is absolutely increasing challenges for PE firms. And it's not only in the operations of their portfolio companies, but it's also in their ability to source, evaluate, and ultimately close on those new investment opportunities. And I can go into some detail on, some of the short-term risks and opportunities that they can look into, and then maybe some of the long-term as well.
No, I think that'd be great. I mean, there was just a recent article in the Wall Street Journal about increased challenges and people trying to figure things out through that, as well as recent talk by Mark Rowan, the CEO of Apollo, about challenges and almost a pause in the M&A environment. What is your sense of some of the shorter-term challenges, the longer-term challenges, and what people could do about that?
Yeah, in terms of the shorter-term challenges, I think immediate term, portfolio companies, their management teams, even the deal teams that are working on them on the sponsor side, they really need to identify the product and supply chain exposure that each of their portfolio companies have, meaning what key costs either are affected or are going to be affected by current or pending tariffs. Maybe they manufacture goods in another country, maybe they import raw materials for production here in the US. Once they understand that, they then need to assess the effect of the cost increases on both profitability and liquidity. How much inventory can the company pre-buy, or how much of any cost increases can it absorb before having to pass some of those costs along to its customers? And how sensitive will the customer base be to those increases, or are they able to negotiate something mutually beneficial with their vendors to help preserve their margins? And in the case of pre-buying inventory to avoid any short-term tariffs, what are the downstream effects of tying up working capital in that way? I think those are some of the key immediate and short-term assessments that need to be made. And then over the longer term, it's perhaps assessing things like the ability to move suppliers, or whether products can be redesigned with components that don't have as much exposure to tariffs. But obviously, those take a little bit longer to play out. And given the uncertainty right now, it might not be necessary, but it's something that can absolutely be planned for the longer term.
Thank you. And then in the services world, outside of the sort of harder core goods world, are you seeing a different take on tariffs or similar concern? What do you see here out there on the services side versus the goods side, where people are importing goods and so forth?
Yeah, well, I think the services side is less prone to the tariffs, and that, quite honestly, might be where we see an uptick in deal activity, which is more focused on, services and items that don't need to be sourced from outside of the United States. So, if there is a potential silver lining to the environment we're in from a deals perspective, I would imagine that's where, a lot of the deal flow will begin to come from if the uncertainty continues.
Thank you. And we saw over the last 2 weeks, since things hit a really bad spot a little bit ago in the stock market, the deal market, all of a sudden we saw a record run of positive days in the S&P. All of a sudden, more optimism, things looking a little bit more exciting and positive. The stock market's back up, which often it's not directly correlated to the PE deal market, but it gives people some hope that things are looking more positive. Where is some of the good news on the horizon? Where can we see some of these silver linings, as you just mentioned?
Yeah, I think the uptick in the stock market is more driven on whether there's certainty or not. And I think just the shock to the system that happened over the past several weeks, and it's allowed itself to calm down with some recent developments and changes in the tariffs. And I think people are, and the market in general is getting a little bit more comfort with that. Not quite back to where we were pre-announcement, but obviously getting closer. I think some of the good news is that not all, like I said earlier, not all lower middle market companies are significantly impacted by the recent tariff news. So on a deals front, I think deals can continue to happen, say in the financial services, maybe in the healthcare sectors where there isn't a sourcing of components from overseas, and it's more focused on the services side of things. And furthermore, from a silver lining perspective, I think if there is a slowdown in deals and sponsors do need to hold on to their portfolio companies a little longer than they originally anticipated, now is a good time to make additional investments in certain value creation initiatives as a way to enhance that business for when a sale process does begin to make more sense and there is more certainty in the market.
Thank you. And what are you most focused on and excited about currently? Like, you head up the Chicago office, you co-head consulting. Chicago seems to remain vibrant from a business perspective. And the consulting area remains one of the core areas. What are you most focused on and excited about currently?
Yeah, I mean, we've definitely seen a slowdown in deals in our transaction advisory discipline in terms of buy-side volume, but we are seeing an uptick in sort of that sell side preparedness, sell side quality of earnings, even in carve outs. So I think there's potential there, and that's got us excited that there is still a need for consulting services. And while it might not be on the deal front, that these portfolio companies, there's opportunity there to get out in front of some of these tariffs, and we can be helpful with that. And even when it comes to planning for liquidity or readiness around this, that's where we can really provide value to our clients.
Simply fantastic, the work that you and your team do. Again, we're visiting with Chris Felderman today, Palm Tree LLC, great group. Chris, I want to thank you as always for joining us today on the Becker Private Equity and Business Podcast. You've got about the brightest team in the business. We really appreciate you spending time with us. Thank you very, very much.
Thanks, Scott. Thanks for having me on.